Good morning, everybody, and welcome to the New York SBDC's webinar series. I'm Kathy Fitzmaurice from the Central Office, and I'll be your host for today's webinar, which is Organizing Your Business and Financial Records. Your microphones and telephones are currently muted to eliminate background noise during the program. We will take questions throughout the presentation. To ask a question, type it into the question box on your control panel, or if you have a working microphone, raise your hand by clicking on the hand icon on your control panel, and I'll unmute you. Today's program is being recorded and will be available through WebMQS in the Shared Resources section. Let's get started. I'm pleased to introduce Dan Polner, a business advisor from our Stony Brook SBDC. Welcome, Dan.
Thank you very much. I appreciate it, Kathy. But by way of background, I just want to let everybody on the call know I was brought in by the SBDC specifically for the New York Rising Grant Assistance Program for small businesses. So my focus for the last 18 months has been exclusively in assisting business owners to complete the process of getting through the grant application. And, through that experience, what we found is, there's probably a fairly good need for small businesses to take some time and focus on their business and record keeping. And that's the purpose of this presentation. In the interim of setting up this webinar, I believe that the two individuals from the SUNY Canton Small Business Development Center have actually created a disaster recovery planning guide, which I'm sure that people can get access to if they haven't already had them delivered from Central by either contacting Mary Hoffman, Darren Conroy, or David Carnival. I would say, having gone through this, it is an exceptionally good compilation of what I'm going to speak to, as well as some additional steps and information for small businesses to, again, organize their business and financial records in an attempt to protect for future disaster. With that, I'm going to begin the presentation. Disasters do not RSVP. They can strike at any time. They can affect both your home and your small business. We clearly found that out, with Hurricane Sandy. It's been a wake-up call. It's been 2 years since the storm, and business owners are still recovering. The question I have for individuals and for business owners is, were you prepared? And, will you be prepared for the next disaster? It's important to know what a discovery plan is and why someone should care. The goal of a recovery plan is to get your business back up and running. Business continuity is disaster recovery. The lost revenue is typically a very serious hurdle to business continuity. The reason to do a recovery plan is to keep the business going, cash flow coming in, and customers served. What we've found is that a good number of businesses, really. Sorry, I'm gonna do this way. It's probably going a little too fast. What we found is that a lot of businesses, who weren't prepared, either financially or in terms of record keeping, spent an exorbitant amount of time either negotiating with insurance carriers or trying to apply for various aid through government assistance programs, and really did not have the wherewithal to deal with the business interruption and the interruption to their working capital. It's still an economic impact for small business here on Long Island today. And again, we're talking 2 years since the storm. What do you need to think about? Well, the first thing in general is emergency planning, and that's the immediate procedures and steps done before and after an interruption to your business to sort of minimize that impact. Again, with a lot of these Sandy clients, had they taken better precaution with their books and records and equipment, before the storm hit, and taken a lot of that stuff to higher ground, the impact of the floods would have been much less severe. In terms of disaster recovery, these are the steps that you have to take to restore some function so that, services can be offered and your business can start generating revenue and cash flow again. The last piece of the puzzle is really this business continuity concept, which is trying to get your organization or your business back to where it was before the storm. And as I said, without emergency planning and the steps for disaster recovery, that business continuity tends to lag. And we still have businesses here today that, have not fully recovered. Be prepared or be sorry. I mean, this really is not a joke. According to the Insurance Information Institute, 15 to 40% of businesses typically fail following a natural or man-made disaster. And that small businesses are even more vulnerable. Our own research says that 70% of small businesses never fully recover from a disaster. And I can tell you, based here on Long Island, that number's probably about right. 2 years in, and we still have businesses that are struggling. All right, so getting ready in terms of disaster planning. One of the things you need to focus on is, what kind of interruption can strike your business, whether it's weather, fire, theft, flooding, or even health or death-related interruptions. Especially in small businesses where key employees or partners fall ill. You need to be prepared in case of that occurrence and have some sort of idea as to what you would do under those circumstances. Before an event even occurs, you need to analyze those risks. Can everybody hear me? I just got a little pop-up message here.
I can hear you.
Okay, very good. You need to create an action plan. In other words, sort of a what-if scenario. If some sort of event, like a fire, a flood, a theft, or a health issue arose. Access to future liquidity needs is a really, really big one. And this is the one that we find over and over again has become an issue for a lot of these small businesses. Having a line of credit when you don't need it is really the way to go. What we found in our experience and my prior experience as a banker, banks are really ready and willing to provide you credit when you don't need it. It's when you absolutely do need it that all of a sudden you can't get it. So one of the recommendations we make to all businesses that we talk to is, ensuring that they have access to future liquidity in case of, either a disaster or just, a missed business plan. Documenting your business assets is also a really important piece. Again, one of the biggest hurdles to this grant program is ensuring that, we're providing assistance to those that actually suffer damage. And getting those damage records is probably the single most difficult part of this entire program, and one that a lot of the small businesses struggle with because they just don't keep sufficient or accurate records of either what assets they had on hand before the storm or what assets they need to replace after the storm. Safeguarding those business assets and financial records is really critical, whether you're dealing with a government program or an insurance carrier. So the other thing is risk assessment. What kinds of hazards are most likely to affect your business? If you have a business near the water, obviously that's a hazard. If you have older employees or key employees that potentially could suffer some sort of health issue. Human error when you're dealing with services, liability, etc. You've got physical plant. Again, that's fire or wind damage, and then just historical kinds of hazards, things that have come up in the past that could come up again. So you have to kind of look at your overall risk assessment profile and evaluate how prepared you are to deal with these types of risk. Insurance is one way to mitigate those risks. Contingency planning is another. As I mentioned, financial liquidity is a really important risk mitigator in case of a business interruption. And as a follow-up, having your business and financial records organized to be able to access in case of an emergency, or having to relocate to a new location is also very, very important. So in terms of your business being covered, the question you ask yourself when you're dealing with insurance providers is how much can you actually afford to lose, either in terms of asset replacement or business interruption. You really need to review your insurance coverage with a reputable agent or broker. What we find is people who think they're fully covered later discover through the fine print that they had very little coverage at all for the type of occurrence that they or event that they incurred, and then they're left with a difficult situation of trying to replace assets without the necessary liquidity to do so. It definitely is the #1 cause for businesses to be impacted and potentially fail due to some sort of unforeseen event. So one of the things you really need to do is make sure your exclusions and your deductibles will provide adequate reimbursement after a disaster event occurs. It's really what's the point of having insurance if an event occurs and you're not covered? And I really want to emphasize obtaining a line of credit or building up a financial cushion as part of your own self-insurance program is a very, very good idea. So now we're going to move on to recovery planning. And again, I'll mention this disaster recovery planning guide is an excellent resource that I highly recommend that the business advisors get their hands on and provide to small businesses as part of their overall counseling. Very few small business owners ever think of doing this type of planning. And this is a great resource for them to have on the shelf as well as for the business advisors. So the things you really need to think about in terms of recovery planning are your customers, your vendors, employees, your equipment, your physical plant, and your business information and document retention. It's best to start now or soon rather than waiting until a disaster strikes. You don't want to become overwhelmed with the task. You want to kind of work on it in sections and in pieces as time permits. Business owners are always telling us they just are too busy focused on running the business day to day to really think about this kind of long-term planning. But if you take it off in bite sizes that are digestible, over a period of time, you can get a full plan implemented. You really need to focus on what's important for your business, whether it's equipment replacement, record recovery, ensuring that your employees, can get back to doing, providing the services that they provide. It's very, very business specific, and every plan is going to be different. You do need to make some plans in advance of an interruption. Once an interruption occurs, it's really too late. So what kind of questions do you need to ask in order to analyze your business? The questions you need to answer for yourself are, what business functions and services do I provide? You need to sort of identify who your customers are and how they might be impacted. How do you serve them? What are your equipment requirements and what's essential equipment for operating your business? Again, whether you're a deli owner whose compressors get blown, or a marina owner whose marina is completely washed out, it's really important to know what you need to maintain your business after a disaster occurs? You know, what's critical to your operation? You know, and what functions and services are the most important to your business? What would be the impact on your services to your clients if you went away? And how would a loss of critical personnel impact the business's functioning? Again, you know, we had a lot of businesses where the employees and the owners were affected at their homes as well. And that additional risk clearly had a major impact on a lot of these businesses' recovery. So the next step is to think about a business impact analysis, and this is really determining how many days or weeks you can operate without your regular stream of income. Again, I can't tell you how many businesses, service or small mom and pop businesses here on the island were unable to just generate customers because of the lack of fuel, because of the disruption from customers on a personal level. You know, one of the questions you need to ask yourself, and this again goes to future liquidity needs, how long will it take before the loss of income affects the delivery of your organization's services? How many payroll periods can you meet with no income? How many vendors will get paid and which ones? What kind of cash reserve do you have? What's your budget for purchasing equipment that would be needed if an event occurs? And how long will it take to implement your business continuity plan and get back to normal operations? All of these factor into how much of a liquidity cushion your business needs in case of a disaster. And I know it's a nice to have. A lot of businesses just don't have access to liquidity. They may be struggling or have maxed out their liquidity lines prior to a disaster occurring, or they're just ramping up their business. To the extent a business can access this type of liquidity, they absolutely need to do so before they need it. And now we're going to get to record keeping. After a disaster strikes, it's really too late to worry about keeping your business records safe. One of the research reports found that only 25% of small businesses had backups of critical programs and data. I can again tell you, when we asked for historical records, a lot of these business owners told us they were washed away. They didn't have backups. They didn't have copies. They didn't have electronic versions of these files. It's really important to keep physical records, both documents and computer data, in a safe location. I recommend daily or hourly backups, but even weekly backups of data are important. An online backup can be the safest as long as you can get back on the internet quickly. Access to the cloud has become, sort of a ubiquitous thing for big businesses. Small businesses, tend not to, utilize that type of a service. And again, in terms of record keeping and organization, in a lot of instances, it may actually be easier if you begin a process of scanning important documents, receipts, canceled checks, invoices, purchase orders, and storing them electronically in an organized fashion rather than keeping files and files of paper, which kind of goes to keeping track of your assets. Knowing what assets your business owns, in case they have to be replaced is extremely important. We recommend keeping a log of major purchases, including receipts, description, purchase date, and purchase amount. For older assets, just taking a picture and logging a description of the asset will help enormously, whether, again, it's an insurance claim or some other means of gaining assistance after a disaster strikes. Again, going towards organizing your financial records, keeping detailed records, invoices, receipts, billing statements, check stubs, all of that is really important. Monthly sales and business cost records. We run QuickBooks seminars here. We highly recommend that small businesses make an attempt to go paperless, or at least have a dual paper and online system for record keeping. I would tell you my job would be a lot easier if everything that I requested came in PDF form. And a lot of it does. You know, the payroll records, the income tax statements, you know, that's all in PDF form. But the basic receipts, invoices, canceled checks, and proof of payments relating to asset loss and asset recovery is a painstaking process as part of this program, and one that would be made a lot easier if small businesses had better record keeping. You know, we highly recommend utilizing, you know, available software tools like QuickBooks, and Backblaze is just an example of cloud-based storage where things like property deeds, ownership agreements, certificates of incorporation, real important critical records can be kept offline and off premises for when you ultimately need them. So in conclusion, you know, we highly recommend that businesses analyze their disaster risks. They start planning early and spread that planning over a period of time so that it's not overwhelming. They start, you know, creating some sort of savings, rainy day fund, or gain access to a line of liquidity before they're going to need it. To organize their business records in such a way that they have access to those critical documents and resources so they can start, you know, getting their business back up and running on a continuity plan. We also recommend that you regularly review and update your plan for any changes. Again, you know, if people get sick or something unforeseen happens, it's important to know, you know, what your response is going to be, and to be ready to execute that plan if and when some sort of unforeseen event occurs. It's impossible to plan for every possible event, but you know, you can think ahead in terms of those events that have a higher probability of occurring. It will make your ability to get your business back up and running, you know, that much better, and ensure the probability that your business is able to sustain a disaster that much higher. With that, I think that concludes my presentation, and I'd like to open it up to any questions we might have on the call.
All right, does anybody have any questions for Dan or any comments? I'm not seeing any come in. All right, well, if you do have questions that you think of later, you can contact Dan directly. And so we'll go ahead and end the webinar. Thank you very much, Dan, for presenting, and thank you, everybody, for joining us today. And again, this was recorded and will be put in WebMQS. And hope you enjoy the rest of your day.